So one of the biggest things traders struggle with is knowing when to move on from the trade. Now listen, I get that the ego doesn't like to lose, nobody likes to lose, but understand that losing is part of trading. So today we're going to be talking about some red flags to look for. So that being said, I'm lead trainer with StocksToTrade, Tim Bohen, back at you. So in this scenario, I'm kind of speaking from the perspective of you're in a trade, things to look for that you're not overstaying, as I mentioned. Like a lot of people get married to these trades. Like they absolutely fall in love with some penny stock because they want it to work so badly. Now that's kind of a newbie thing. If you're old and jaded like me, we know these are just trading vehicles. We respect the price action. But I was a new trader too, 18 years ago. And I remember that once my money was invested, we're still trading, but quote unquote invested, okay. Once my money was in the trade, I would find myself getting emotionally biased and I really wanted it to work. All of us struggle at the beginning. It's part of the process. Everybody struggles when they start anything new. People, unfortunately, in trading expect immediate wins. It's just not that way. I don't care if you're trying to learn a language or trying to learn how to program, okay? Everyone's a beginner in the beginning. Everyone's a newbie in the beginning. But I remember being very emotionally attached and I would ignore the red flags because I wanted the trade to work, so badly. Because I was like, man, I want to win so bad. So in this scenario, we're kind of talking about a stock that you bought or shorted. I mean, this kind of applies both ways, really. And it just kind of stopped, not really doing anything. And I want you to be looking for these things because what you can do if you recognize these is you can be out before the stock gives up the ghost, or if you're short, spikes higher. So that's the idea. Like what I want is, say you buy a breakout and at $1, okay, let's use a term, and it goes up to 125, didn't quite hit your goal, and then it just kind of trickles lower. And let's say in this hypothetical situation, it's at $1.10 or $1.15. So you're still in the green, but it's not really a profitable number that you want to take. We don't day trade penny stocks for a 9% gain. Okay, if you want 9% on your money, first thing I'd tell you is buy some NVIDIA, buy some Tesla, buy some Apple. At least you can sleep at night. We don't day trade penny stocks for 9%. Okay, that might be a red flag for you right there. Listen, if you want small, consistent gains in the market, which nothing wrong with that, especially if you're talking about your longer term accounts, I'd tell you look at swing trading. Look at investing in AI stocks and EV stocks that have a good balance sheet and probably aren't going to dilute. The whole point of trading penny stocks is we're looking for 50%, 100%, 200%. Because of the volatility. So there's your first red flag. If you want single digit gains, don't trade penny stocks. It's not worth the risk and reward. Buy some NVIDIA and forget about it, and you'll be happy with your 9% at the end of the month. So back to other red flags to look for or in this scenario. So you're still green, but the stock really isn't doing anything. So what I want you to do is to be able to look for these things so that you can be out before a big spike to the downside, or a red dagger, as they say, or a washout, as they say. Because if you know what to look for, now you can take that mediocre gain, or maybe even a break-even trade. I mean, listen, there's nothing wrong with break-even trades, and you can be out before the big loss. So big thing we want to look for is fading volume. Okay, understand that when we're talking about day trading, we need high volume moves. We need more buyers. We need irrational exuberance. We want everyone piling into this stock, because what makes a stock move 500% in a day? One of the biggest things is people just piling in with market orders, with FOMO, that just are like, I gotta get in now. Now, you're not gonna do that because you watch these videos, but a lot of people do. They see a big move. They can't wait for a pullback. They can't wait for what's called a red candle theory, and RCT as we call it. They just pile in. But if you know to recognize that, that's what creates the big moves, because you can be ready in advance and then let the chasers push it up, and then we sell to the chasers. That's the beautiful thing. But fading volume's a big red flag, and there's multiple time frames that I recommend using. I'm not a big 1 minute candle guy. I mean, I know day traders love the 1 minute candles, but I think that that's zoomed in too far. Now, this isn't a hard set rule. Like if you're using 1 minute candles and you like them, it's fine. But something that I coach people on a lot is zooming out a little bit, going to 5 minute candles, and ignoring all of that, wickiness, as we say, in 1 minute candles. That's where the RCT comes in. It's a 5 minute candle pattern. But with 5 minute candles, if you're seeing, as we proceed kind of past the market rush, fading volume on those candles, but yet the stock is still holding up, that's a red flag. Like that's telling you that, hey, looks like everyone's probably moved on to the next penny stock du jour. There aren't more buyers, and even though the price is holding up, maybe I want to move here because as that volume move on because that volume's fading and there's not more buyers. So now I can move on for that small gain or that break-even trade before the exit comes. So fading volume is huge. Next is above or below VWAP. So VWAP is, listen, with all indicators, I recommend studying them, using them with a grain of salt. Okay, VWAP is the number one day trading indicator out there right now. Why is it the number one day trading indicator? It's just a self-fulfilling prophecy. Everyone uses it. Everyone has it on their charts. So it becomes that idea of a self-fulfilling prophecy. If everyone's watching it, stocks react to it. Now, VWAP is volume weighted average price. What I do like about it as an indicator is it's basically an amalgamation of price and volume, the two most important indicators. So a lot of people, and me included, will tell you only price matters, only volume matters. But the nice thing about VWAP is it is basically a combination of price action and volume, so it's a useful indicator. So the red flags are if your stock's under VWAP. It's a bullish bearish indicator. So let's go back to that exact same scenario. You bought it $1. Let's say it spiked up to 125 and it's trickling lower and you're still in the green. But let's say in this scenario, VWAP is $1.15. And now this stock is at $1.09, $1.10, under VWAP. And when it perks, like when it upticks, it can't reclaim VWAP. So that's a big bullish bearish indicator. And stocks under VWAP are considered to be bearish, current, real time. And stocks above VWAP are considered to be bullish. So big red flag. So in that scenario, if that stock can't pierce through VWAP, can't get back above VWAP, that's your signal to move on. Now, maybe the stock spikes late day because some news came out or a pump happened or whatever, but all you can do is react in real time. And I would rather you follow this and be out for that small game after it failed to follow through, then again, wait for it to crack under $1, drop down to 75 cents, and now instead of a small gain, you took a big loss. So that's another red flag. Last one I want to go over is just news. A lot of the times people are in these trades, you're busy, you're at work, you're doing things, you're taking your kids somewhere, and all of a sudden the drop happens and you're like, what happened? Why? It was basing a VWAP. The volume was good. Why did this thing just collapse? News moves these stocks. I mean, listen, 99% of the trades we make in short-term trading land are based around catalyst and news events. So one thing I would tell you to do is check out breaking news. Okay, breaking news is built into the StocksToTrade platform, and it's basically two 25-year veterans that watch everything. Like they watch every data feed, every Twitter feed, every chat room, and it's something that you simply can't do as a part-time trader, or even listen, maybe you're full-time. It's difficult to watch all this. So breaking news is a great asset to, number one, allow you to focus, but also have the information before everybody else does. So if breaking news drops a negative article, even if you're still in the green, that's your red flag to get out. Because what happens is, and you'll see this over and over again, once you have breaking news, they drop the news, and then a few minutes later, or maybe 15 minutes or 20 minutes or an hour, stock craters, because they're always first, like consistently first with this stuff. And what'll happen is Once everyone else finds out about it, whether it be on Twitter, which I would tell you get off Twitter, or in other chat rooms, once they find out about it, that's when the drop happens. So you can, back to being out before the drop, in that scenario, you see it on breaking news, even if you're green in this trade, you move on because you knew before the masses did. So that being said, watch these red flags, my friend. And if you're curious about breaking news, absolute game changer. Like, I don't follow any chat rooms. I don't follow any Twitter accounts. I don't follow any of these nonsense websites. All I do is have on one of my monitors, breaking news chat, giving me all the actionable data. Cool thing is that's included as part of the Daily Income Trader system, that mentorship program that I do. So if you're curious about, Oracle and algorithms and scans and, processes, as well as you want access to breaking news, hit that link below. Check out a free webinar where we give you a tour of everything included. You're not committing to anything. You're just checking out the webinar, seeing everything that's included. You'll get a much longer breakdown of what breaking news does. I would highly recommend hitting that link, picking a time that works for you, and checking out that webinar.